Hey, this is Sasha. Welcome to another episode on Let's Talk Stocks. Today what we're going to do is take a look at why it's kind of silly to sell option premium if you're thinking about getting that Theta on a Friday for the weekend. A lot of traders, they think, hey, Friday's a good day to sell option premium because I'm going to get Saturday and Sunday to be able to make more money on Monday. And if we look at kind of software here and we go ahead and put on a trade, let's say we're looking at here Netflix, and today we're kind of neutral on the position, and let's say we take this out a few days, we're making, $7, $8 a day. We get to that Friday and we think, hey, well, we'll probably make, another couple of bucks, 2 days worth of Theta. So that could be $16 worth. So that's what most people think. And then by Monday, I'm up 55 bucks. That's what most people think, right? Wrong. That's not the way that things work. Now, when we look at option trades, of course, the Theta decay, and let me share with you here this Theta. If you haven't seen this picture, you will very soon within your options education or right now. Normal Theta decay kind of looks like this, right? So if you look at it, and then it decays quicker. So 60 days, let's say 30 days, and let's say 0 days, you're exponential. But when we look at weekends, okay, and weekdays, so throughout the week, the decay kind of looks like that. Then it slows down and then a little bit further. So it's a little bit funky in that way because what happens is market makers know that there's a weekend coming up. Don't think that, hey, you're going to be the smartest guy out there and you're going to be able to sell option premium on a Friday and go out on a Monday and make a bunch of money, because otherwise everybody would be doing it. But that's not the case. You can't just put on a trade on a Friday and go ahead and get out on a Monday, because oftentimes by the time you try to sell a trade, right, selling option premium, calendar, iron condor, that weekend is already budgeted and priced in. And they start doing this way earlier on, maybe even late Wednesday, Thursday, to go ahead and tweak the vols, the volatilities. They just move them a little bit up and down based on what they need. And they can also go ahead and shift the days. Now, I'm not a market maker. I've never been a market maker, but from all the things I've studied, from the things I've learned, from the coaches I've talked to, from the gurus I've spoken to and listened to, here's how it kind of works. And I'm going to try to simplify it for you because I haven't seen too much videos and content on this. So let me share with you how this kind of works on paper here, and I'll dumb it down. Basically, if we go ahead and we start thinking about the volatilities in the pit, and you can do it based on volatilities, but let's look at pricing because it really comes down to pricing in the pit, okay? If we start looking at pricing, what they really start doing is, let's just look at Wednesday, let's look at our Thursday, Friday, Saturday, Sunday, and Monday. So here's kind of our week, and I'm going to go ahead and draw a few lines for you here, and we'll just go ahead and use the first group as our kind of control group, okay? So this first one will be our control group. So this is, we'll just call it control. Now, normally you would think the prices will be, and I'm just going to go downward because thinking of Theta decay, right? So when you think of Theta decay, you think prices will go down. So if a price and contract is, let's say $4.70, and you're trying to buy option premium, eventually it gets lower and lower with time, right? So then it gets to $3.70 and so on. So what happens is we'll use this concept just so to make conversation's sake easy and to think about it in an easy way. That's what we normally think about. So if this is our control group, let's say we're starting with our option premium, and I'm going to do a fast decay just so it's easier to see. Let's say we're starting at $6.90. Okay, so that's the value of the option. Think of it as the same strike. You can say the $8 strike. This could be a call. It could be a put, again, I'm just trying to illustrate the example for you. Then on Thursday, you would think, okay, well, now it should be $6.20. That's the price of the option. Then on Friday, it should be, let's say, $5.40. Saturday, you would think, okay, well, now we're down to $5. Sunday, we're down to $4.20. And then on Monday, you should be at maybe $3.60 or something along those lines. So that could be the prices. As far as Theta goes, again, one could be $8, $8.20, $8.40, $9, and so on. So again, really just depends on how you're writing the numbers. But let's look at pricing, because that's what it comes down to, what you're buying and paying for the option. That's our control group. That's what it should be. This is the world that we should live in if everybody was nice, if everybody was doing what they should be doing, and hey, if this is what we assumed should be happening. But that's not the world we live in, because market makers know that there's a weekend coming up. So in fact, what happens is they can tweak the days and look at it in terms of the days being different, or tweak the vols. And I think the volatility is a little more difficult to explain on paper. So I'm going to just show you with the days, but everybody can do it a little bit different in terms of the pits and in these option markets. But this is just to give you an illustration of how they may think about it. So on Wednesday, what they typically do is already towards the end of the day. Now this happens more towards the end of the day on Wednesday, not at the beginning because it's too early in the week. But at the end of the day, they might start looking, oh, okay, well, I got the weekend coming up. Let me see if I could dump or get rid of or buy what I need to buy more at the Thursday pricing, right? Because they're looking at their software. So what they're doing is, okay, well, the price right now is $6.90. It's going to be $6.20. Let me see if I can sell things maybe around somewhere in between there. Let's say around $6.45. So they're already starting to kind of look at that next day. On Thursday, what they do is, okay, well, on Thursday now, the price should be $6.20. Okay, but they start looking kind of Friday to Saturday. So what they start doing is, again, at the beginning of the day, they might start looking more along the lines of, okay, well, Friday pricing is going to be around $5.40. So I might do $5.80 for now. Towards the end of the day, you might get, $5.60 or so, because they're already budgeting in, the weekend that's coming up. So they're already looking at the next day. So as more sellers are coming in, option sellers or people looking to trade options, they're looking and pricing them further out in time. So they're shifting their days. And as you get closer and closer to Friday, the more it shifts. So basically, by the end of the day on Friday, they're looking at kind of Sunday or Monday pricing. So let's say Sunday, it should be around $4.20 and then $3.60. Well, what they're going to do is kind of already price it at, let's say, hey, on Friday, you should already be getting kind of that $3.80 pricing. That's at the end of the day. At the beginning of the day, you might be getting more like that $4.20 pricing. So, that shift happens. And of course, there's no trades that take place Saturday or Sunday. So that's why they have to budget this price in, because they know that Monday's coming up, because they're looking at that. This is already canceled out in their software. That's what they're doing. They're looking at it completely different, looking and projecting in time forward. So I hope that kind of makes sense and gives you some ideas, because, hey, it's no secret here, but I wonder if your mind is a little blown, because for some people, they don't get this concept. They don't understand that, hey, these market makers, they got to make some money. They're in business. They're trying to do some things. And hey, budgeting things on, trying to sell things on a Friday, an option premium, can you do it? Yeah, you can. If you know and understand your pricings, there's nothing wrong with doing things on a Friday. There's nothing wrong with putting on trades on a Thursday. But what I don't want you to think about is saying, hey, well, I'm going to put this trade on a Thursday or a Friday to go ahead and capture and make a lot of premium over the weekend. You'll probably still get some premium over the weekend, but it's not going to be as much as you probably project or as much as you probably think. So instead, go in it with a clear mind, understanding that you're probably going to negate some of that weekend profitability, but you might get some benefits out of it, but it's not going to be huge, and it's probably not going to be as much as your software projects, because the market makers, they're already predicting and projecting for the weekend that's coming up, because they know and understand that, hey, the market's going to be closed for a couple days. And if there's a Monday that, might have a holiday, they're thinking about that as well. So you can't really outsmart the market makers because they're projecting it, they're putting that into place, they're budgeting their pricings into that. And what you're going to get on your trade, it's going to be tweaked a little bit. So don't go in thinking you're going to rob them, because you won't. Instead, understand that, hey, you need to be a little more careful putting on your trades on that, late Thursday and on Friday. But you can still do it if you want to get into a trade, and if you still need to get into a trade, if you need to hedge a trade, there's nothing wrong with doing that. It's just you have to understand that the prices are slightly adjusted to counteract for that weekend situation. Anyways, I hope this makes sense and gives you some insight to putting on some trades there as we approach the weekend. And you always think about that in mind before you put on a trade, because hey, market makers are thinking about these things and changing the prices slightly to counteract for that. So thank you so much for joining me in this week's episode. Hope you found it helpful. And if you did, be sure to subscribe by hitting the face icon, or join me on my newsletter list by clicking the link right over here, along with getting a few good freebies. Thanks again, and I will see you next time.